All right, welcome back to my channel, everybody. Roscoe here from the Gibson Residential Group. I'm your Denver Metro, Northern Colorado realtor, and I've got a really great discussion for you guys today. We've all heard about how interest rates and mortgage and everything is crazy and tearing up the market. Well, I'm going to bring some truth and dispel some of the myths about what's going on. So I have somebody helping us out today. A friend of mine, his name is Walter Parker. He's with Elevate Home Loans, and he's going to tell us exactly what's happening. Let's jump into this. All right, hey, thanks very much, Walter. I so appreciate your time today coming by and letting everyone know what the heck is going on with the market.
My pleasure, Roscoe.
So I thought what we'd do is we could kind of break it down today because I have buyers, I have sellers. So let's talk about how this is going to help out the buyers. What's really the situation for the buyers? How does this interest rates, the market, and the mortgage, how's that all affecting sellers? And then let's also speak to my friends out there who are the renters and let them know what really is going on. So I'll let you take it away. What's happening for buyers? What is truly happening for these buyers when it comes to getting their rates? Is this really as horrible as the media is telling everything it is? I have a feeling it's not, by the way. What's the truth here?
So there's the media truth and then there's the real truth, right?
Exactly.
So let's talk about this because negativity is what sells newspapers, it sells airtime on TV and everything else. The reality of the fact is the Fed's made a big decision just a week and a day ago as far as we're going to raise the Fed rate by 0.75 or 75 basis points. What does that mean to the consumer? Well, the Fed rate really affects credit cards and automobile loans, installment loans, right? That's what the banks actually use and lend off of for that. It does not affect, no matter how much the media will tell you, no matter how many websites and money-wise sites, oh, this is going to cause mortgage rates to go up. That's not true. In fact, in an environment where we have been fighting inflation, a lack of confidence in the economy, high amount of inflation. The reports are like 8.5% inflation, but in all reality, once you add in food and groceries and other items, it's actually 20%. We've seen inflation year over year. We've all felt in our pocketbook. That lack of confidence long-term in the economy has caused interest rates to go up. In addition, that the federal government for the last 2 years were buying mortgage-backed securities. Mortgage-backed securities is really what sets rates. So when they were buying into mortgage-backed securities, then mortgage-backed securities were all-time high, which means rates were at an all-time low. The 10-year note is what I would say, watch that. As it gets higher, interest rates go higher. As it gets lower, the interest rates go lower. So we're always watching that. So when the Feds made that announcement, they said, hey, we're gonna raise it 75 basis points. The market immediately knew, okay, they're serious about fighting inflation. A higher, rate on the dollar is going to make the dollar more valuable.
Right.
So cheap money, it means inflation, more expensive money. So it actually was a great thing overall, even though a lot of people may fill in their pocketbooks for the credit card. But if you're a home buyer, that's actually great because that's going to keep the rates from just escalating up. In November last year, we were at 3.25%. And
so quick, right?
And so 7 months later we're talking 6.5%, literally double the interest rate. Now that's starting to come down since the Feds did that. So is it doom and gloom? No, it's not. And again, we're not going to keep going up forever. We may have peaked out, we may not. I don't have a crystal ball on that, but I can tell you there's a lot more confidence that we're attacking inflation than we were before.
For sure.
So that means for the buyers that, hey, this constant, I may not be able to afford a home, it may have put at least a glass ceiling on it for now, and you have more opportunities. Now, the rates going up have actually translated to less people qualifying. Less people qualifying means that instead of 25 bids on the same home and willing to pay $100,000 over asking price, you may have 5 people to look at the home and only 2 offers on the home. So that means that buyers have probably the best opportunity in the last 2 years they've ever had to buy a home. To win an actual contract on a home they like also means the sellers don't necessarily mean that they could just put any number out there and get above that number.
Right, yeah.
It's got to make sense, right?
Kind of bad news for the sellers when you really look at it. In a way.
In a way,
they're still
right?
making
Yeah.
a lot of money, which is great.
Right.
If you've owned a home for the last few years, you've seen your appreciation. Boom, right? You've gone up.
20%, 25, 30% equity
Exactly.
gain. And there's no investment I've ever seen
Right.
you gain that much in a year on
Exactly.
a six-figure investment, right?
Yep.
So they've gained a lot, but we know that's not sustainable long term.
Exactly.
And does it mean that we're about to have a bubble pop?
Right.
You know, the answer to that is absolutely not.
Right.
The only time we've had a bubble pop caused by the real estate industry, as far as recession, was when we had almost 2 million surplus homes and the lowest population in the history of this country for 25 to 35-year-olds.
Wow.
So where we're at now, we have a 3 million
Yeah, we
shortage.
still have that gap. We still
And-
don't have enough homes.
And we have the highest population in the history of our country
Right.
for 25 to 35-year-olds. So it's the exact opposite of what it was in 08.
Right.
For that, and this add this on top, foreclosures caused a lot of that
Yeah.
that pop.
Yep.
The average American that's owned their home for at least more than 1 to 2 years is
Mhm.
sitting on at least $65,000 to $100,000 in equity
Wow.
in their home.
Yeah.
So they're not going to foreclose and walk away from $100,000. Would you?
Yeah, exactly. Right. Yeah, exactly.
I mean, I'm going to sell the home.
You're gonna,
you know,
you're gonna stay
Even
in
if I do it at a
yeah.
discount, I'm walking away with 60 grand in my pocket. I'm not foreclosing.
Right.
So foreclosures cause home values to drop considerably.
Right.
If we're not going to have foreclosures, then where is this bubble popping? That's why
Exactly.
I keep challenging everybody. It's
Exactly.
not a bubble.
It's
It's,
not a
a
bubble.
price
Yeah,
correction.
yeah.
Right.
Yeah, so for the buyers, as you guys see, many of you I've talked to, we're seeing, first off, how many days on the market are we seeing homes sitting now? We have way more inventory than we've had, 18 months or something, you're saying?
Yeah.
We have way more homes on the market, right? We're not having homes skyrocket 100,000 over, 50,000 over list, over ask, all that stuff. Those days are right now gone. So as a buyer, sure, rates have ticked up, but we have way more inventory and we have a way better a chance now for you guys to get in because you're not competing and we don't have any of that nonsense we were dealing with just 6 weeks ago.
6 weeks ago, you were looking at 100,000 over asking price. You were looking at waiving inspections.
Exactly.
You were looking at
giving
waiving
everything
appraisal.
away.
You were giving everything away. Turn the tables now.
Yep.
We're seeing price reductions. We're seeing you're going for asking, maybe even a little under asking.
Yeah, for sure.
You know, so what a difference a day makes, right?
Yeah, exactly.
So if you're a buyer, this is the time not to back off, not to say I'm going to wait till the market crashes, because in all honesty, a recession has always benefited real estate, never hurt real estate,
Right.
other than 08. And we've been through a ton of recession. People talk about, hey, wish they can go back to good old days. You know, in the 1950s, we had 5 recessions in 10 years.
Wow.
So again, but that was the booming time of, so we don't think about it as, man, 5 recessions.
Right.
We've had 1 recession in the last 14 years.
Right. And I remember my folks telling me, I probably wrong on this number, but wasn't their interest rates 30, 40 years ago like 15, 20%?
Yeah.
Outrageously
Yeah, the 80s.
high numbers.
And before this year set a record for the highest increase in interest rates, okay?
Mhm.
It is. But again, we were also the lowest interest rates ever in history.
Right, yeah, exactly.
Right, you know,
Right.
last
So
couple
everybody got
years.
spoiled on that cheap sugar.
Everybody had cheap sugar. And between 1989 and 1990, interest rates went from 11 to 13%.
Wow.
So 2% in 1 year, right? And
Right.
and you know what happened? Housing sales still went up
Right.
year over year.
Gotcha.
So again, yes, houses are worth a lot more, but we're making more. We're making 88 and 89
Right.
as
Yeah.
well. If you were making 45,000 in 1989, you were making really good money,
Oh, for
right?
sure. For sure.
Now you need 2 incomes,
Yeah,
right?
yeah,
It's that.
For sure.
But,
Yeah.
so there's a lot of factors here, but bottom line, don't believe the hype in the news.
Yeah.
It's not a horrible time to buy. Again, I think for all those reasons that we were dealing with last year,
Mhm.
it's actually a better time for buyers than it was last year.
I'm more
I mean,
excited for my buyers,
yeah.
to be completely honest.
No
with you.
exhaustion from seeing 25 bids on 25 homes. I mean,
We have so many options now. If we could just come to terms with what the interest rate really means, the option of refinancing in whether
Yes.
a few months to a few years out of the gate after this purchase,
Yeah.
it's not as bad as they're making it out
No.
to be, right?
there's many options, and if you're still tight on cash, don't let that be the deterrent.
Right.
There's down payment assistance programs. You're allowed to still make a decent amount of money.
Right.
80, 90,000 a year. It depends on the county. We can always talk to you about that. And yeah, it really is a great time. It's not a sales cliche or to
Right.
get you to
No,
move.
no, no.
But again, and we'll talk about renters here in a minute, but And now, so I would say, bottom line, if you're a buyer, do not wait. It's costing you a lot of money.
Yeah.
We could break down the numbers, basically $500,000.
Right.
If you want me to go ahead and do that or not, but
we'll set that for another.
Okay,
video.
we'll save that for another one. All right.
So yeah, so again, guys, what you most importantly need to do right now is find a good team who is, as you can hear, find people who know what has truly gone on in the industry and have options for you in your situation. Because everybody's situation is going to be a little bit different. But somebody like Walter here, we know exactly what's going on. So let's shift it now. So now I have my sellers, right? I have a few sellers out there who are now a little worried that, am I not going to get my, $100,000? Should we ask more? What's going on for sellers in this market? Could you break that down for us?
Many sellers are always going to be a buyer as well. So for all the benefits as a buyer, take that out of the equation when you go to buy now versus buying a year ago. Many people did sell, and another reason why we have such a shortage of inventory is, I'm sure you heard the response, well, if I sell, what am I going to buy? Right. Where am I going to go?
Exactly. Yeah, you couldn't.
And
really challenging.
All the money I'm making, but I have to bid over asking. If I make $150,000, I'm probably going to spend 2/3 of that in over appraised value on a home, and I just don't want to do that. You don't have to worry about that right now. Okay, so one, but now as a seller, being on the receiving end, hey, that was great when you got it, but you still have to turn around and buy. So you were really robbing Peter to pay Paul.
Yep.
So now you're at a place where, hey, interest rates have risen. Why would I sell now? Great question. I will tell you, because you can turn around and buy right now.
Yeah,
it's
there's the inventory.
The inventory there.
Side, yeah.
And again, everybody gets locked on interest rates. You have to take interest rates out of the equation because again, they're going to go up and down. You're looking for your dream home, not your dream loan.
Exactly.
So if you
yeah.
have a chance to get $200,000 out of your house right now, take the money.
Yep.
Because again, you might have made $300,000 3 months ago,
right,
but that may not come back for another 10, 12 years.
Exactly.
Right?
Yeah,
so
yeah, for sure.
You're still at a peak point now. And yes, people are saying, well, maybe I'll wait till recession, rates go down. Again, you're going to lose out on what you're going to buy. And when you become a buyer as a seller, if rates are lower, guess what? That means more competition in the market.
Gotcha.
So again, there's always the other side. The grass is green over there, but making this extra amount of money. But if the market is a very competitive market, which is not as competitive right now, you can turn around, take the money, and buy. And plus, listen, you're just dealing with real numbers now.
Right.
It's not fake numbers like it's been last year. And I say fake numbers. People made their equity. They made that $100,000. Everybody that bought last year, on average, 20 to 25% equity gain.
For sure.
So it wasn't a bad option. But what happens if rates do continue to go up and you wait as a seller, it's costing you more money every week. Same thing as a buyer on what you're going to buy unless you're paying full cash. If you're paying full cash, who cares about interest rates? Sell the house and just go buy a house. Exactly. But that house is going to cost you much more a year from now.
For sure.
So, and you may not gain that much equity a year from now.
Right.
So,
right.
How that works in a couple different ways. But I would still say as a seller, listen, it's not as crazy or manic of the market. People are still willing to be flexible with you as a buyer because we've also come out of this. So there's a little PTSD,
right?
I've given 2 months to move out of the house, or lease back or whatever, right?
Yeah.
So that's still there. It's just really, do not believe the hype of the media of negativity and it's, the market's about to downfall. There is no bubble popping. We still have a shortage of inventory. That puts you as a seller in a great place still. It's just calmed down to where things are more above board.
So I guess then the other aspect or the other topic here then are the people like some of our viewers out there who are the renters, right?
Yeah.
So you hit a lot of the good points, right? But let's talk about why renting is literally taking your money, burning it, throwing it away, just saying, hey, I don't need this money anymore. Let us know a little bit about why it's still a really good time for anybody who's out there who wants to transition from that rental into that home. Is it as bad for them, or like what's the real case?
No, so it's like this. You could bury your head in the sand,
right?
Or you could put your money in the bank.
Sure.
Right. All right. Even if you put your money in the bank,
both of those options honestly don't sound good to me.
They don't sound good, but you get a small return on your money. But hey, why don't you invest in something you know is going to be an appreciating asset? How
Right.
quickly are people willing to go out and spend $50,000, $75,000 on a car?
Right.
The moment you drive off the lot, it drops 30% in value,
Yeah, for sure.
right?
Yeah.
So that's depreciating asset. Now we're talking bigger dollars, right? But at the same time, rent is also going up 18 to 20% year over year.
Yeah.
So when you were paying $2,100, all of a sudden you get your lease renewal, now it's $2,500.
Oh, yeah, and rents here down in Denver are outrageous. I mean,
Outrageous, right?
the whole metro area is truly blowing
Yeah.
up. It's you as a renter, you really have to start considering making the move because again,
And
you're throwing your money away.
I'll tell you, in Colorado, some of the most relaxed landlord laws. So I found this out personally, a horror story, a couple years back in Parker, luxury townhome place. Basically, air conditioner broke in September. Didn't worry about it too much till come April, May next year. They're like, well, until we reach 90 degrees, like 3 days in a row, we don't have to repair it. So like we were living without air conditioning, paying over $2,200 a month in rent.
Right.
This was 4 years ago,
Right.
right? And so as a renter, you have no control over the property you live in. You have literally zero return. So renters are saying, I'm going to wait for rates to come back down. First of all, the day that it comes back down to 2.5%, hopefully we're not in that case again.
Right.
It took a pandemic
Yeah,
and
that
an
was
entire country to shut down. Right? That was a once in 100 years
Right,
type
right.
of thing, right? So the likelihood of that happening again, probably slim and none, and Slim's already left the door.
Yeah.
So the other thing is you're worried about interest rates. As a renter, you're paying 100% as your interest
Oh,
rate.
for sure. Yeah.
There's zero return.
Yeah.
You're not making, so let's just break this down easily. You're looking at a $500,000 house. Let's just say over the next 12 months, it's going to gain 5% equity. So that's $25,000 that you will gain just by owning a home.
Right.
Not even talking about payments.
Right.
And yes, a lot of your payment goes to interest and taxes and homeowners insurance. But let's just say $1,000 of that payment goes to your equity. That's $12,000. That means you made with your investment, just paying what you're already paying in rent, right? You made $37,000
Wow.
versus $0 in 1 year. Okay.
And potentially that's some people's in the States, that's their yearly income. Half of their yearly income. So yeah, think about that in perspective of what's really going on. Where else are you gonna get this return? Definitely not in stock market.
No, it's not. And generational wealth always begins with real estate.
Exactly.
It just always does. You can try to play Bitcoin and everything.
Right.
If you're in Bitcoin right now, I'm sorry, it's
Yeah.
just not doing great, right? A lot of people have lost. I have relatives, they own a home, but they also play the market,
Right.
and they're down, the entire stock market is down 20%, probably headed towards 30 to 35%.
Oh yeah, when it finally hit. Yep.
As far as loss. Your home is not losing.
Right.
You're gaining.
Right.
So again, as a renter, it really should be no brainer. The biggest pushback we get is I don't have enough money or don't make anything.
Right.
You talked about it earlier. You don't need 20% down.
Yeah.
It's still majority of American thinks you need 20% down to buy a home. 3.5%, you can get into a home very easily. Sometimes zero if
Right.
you use down payment assistance.
For sure. Yeah.
So we have so many programs. And say you own your own business and you don't show much on your tax returns. You think you're disqualified from that. Guess what? We have programs that just look at your 1099. We have programs that just look at your bank statements. We have other options.
Yeah.
So again, always do your homework. Get with a great realtor.
Yeah, find a great team who knows exactly.
Exactly.
How to help your situation. Because everybody again is going to be different, but there are so many options for people out there.
Exactly.
One other
Yeah.
thing we should talk about as a renter, unless you're running a business out of your home, you have no tax deductions
Right.
as a renter. Break it down a little bit, just a little bit
Yeah.
of detail for these guys. What actually happens when you own a home and what you're able to write off and how that's going to help keep that wealth and that money in your pocket.
100%. So say you did buy a house this year, when you go to do your taxes on TurboTax, or
Right.
you go to CPA, one of the first questions is, did you buy a home this year?
Right.
Why do they ask that? Because money that you use to buy the home, first of all, can be a tax deduction. Guess what? The interest that you're paying on. So yeah, you're paying a little more interest now, 6 versus 5 or 4. But you know what? That interest can be also tax deductible.
Right.
It all depends on how you file your taxes. I'm not a CPA,
We're not
right?
CPAs.
We're not
Don't
CPAs.
Please speak to your tax attorney or your CPA about because they're going to give you the actual information. We're just going to give you guys some of the basic facts.
I will dare to say probably 9.9%, 9.9 out of 10 CPAs will tell you, should I buy a home or should I rent?
Oh.
They're going to tell you all day. There's so many tax havens you have
Yeah.
when you own a home.
Yeah,
So
for
there is absolutely a lot more benefits than even what we're going to talk about to owning versus rent.
Yeah, cool. Well, anything else you'd like to, any other myths we think we haven't touched on that we need to dispel for these guys, let them know the truth? But I think you did a great job. I mean, it's really, sure, rates are up.
Yeah.
But they were also at lows that we probably never should have hit if it wasn't for the pandemic.
Right.
Somewhere between 4 to 6 is that's a great range for the last 20 years.
It really is. It really is.
And that's what the average has been, right? Bouncing somewhere in there.
Yeah.
Aside from this pandemic. So if that's where we're at. That's where we're bouncing.
It's amazing how many people I come across that have $15,000, $20,000, $30,000 of credit card debt. It's charging 23%.
Oh yeah.
28, 29% a month.
Yeah.
But they see 6% to freak out.
Yeah.
Right? Because we don't look at our credit cards the same way.
Right.
And even people are sitting on equity. So again, we're not going to have. Here's my final thing on bubble popping, not popping.
Right.
Again, 2008, we had all these foreclosures that were going on because people kept refinancing for 2 years, get money.
Yep.
Boom, all of a sudden the value. Even if homes set at zero today over tomorrow, people are already sitting on $60,000 to $100,000 of equity in their home. So would you walk away from a home and let $100,000 just sit on the table?
Absolutely not. Not the way things are now.
No. So unless you'd be willing to do that, you're not going to foreclose on your home. You'd sell your home, even at a discounted price if you had to, right? Just to get out real quick.
Worst cases, you're breaking even.
You're breaking
worse.
I think in worst cases,
you're making
half of that, right? Instead of the 100,000, you're making 50,000.
Exactly.
You can do something with that, right? So again, do not believe the media. The media is all about doom and gloom. That's what sells. The reality is we've been through recession many, many times before. 2008. We're going to go through recession. It's cyclical. The market, everything is. Just make sure you are talking to people that know what they're doing and know about the market, or actually, have some history in it. I've been in the business 16 years. I lived through 2008, was actually a branch manager for Bank of America back in the day. Wow. So I saw everything. Again, Bank of America, if you look at the number of foreclosures, they were the largest in Wells. They went through that. So I've seen everything firsthand. We're not anywhere close to that again right now. So don't be scared. Don't let your brother, your mom, your coworker, everybody tell you what they did 5-6 years ago. It is a different market, so you need to be prepared. Educated is important.
That's the key. Investing in life for any of us, with anything, is we have to educate ourselves. The more you know, as they say, the more you grow. And that truly is the case, right? Find experts, find people who know what's going on. Speak to them again about your specific situation. I guarantee that there are options that are out there that you probably have no clue about. And it's really not as bad as you guys say.
Right. You're closer than you think, is what I always say.
Exactly.
Right. You're closer to being a homeowner. You're closer to actually selling and being happy to find a new place. It's much closer than what you realize. Call this guy.
That's right. Call this guy. So everybody, thanks so very much, Walter.
Thank you very much.
This is Walter Parker again from Elevate Home Loans. I'm going to have his contact info right here. And again, my name is Roscoe from the Gibson Residential Group. Please, if you guys have liked and enjoyed this video and learned anything, if you could please hit that like, subscribe, and tap that notification bell, I'd greatly appreciate it. And I'll be seeing you guys in the next video, and I'll be bringing you some more homes that rock.